In this example, we use if statement to identify periods when the stock market move in a certain fashion. Here I have Nasdaq Composite Index monthly data for the last 20 years. We could first compute the monthly change, and a somewhat arbitrary rule states that if the 3 months combined change is greater than 300 points, then we call this market is an upbeat market. On the other hand, if the 3 months total drops more than 300 points, then we call the market is downbeat. Our task right now is to identify those upbeat and downbeat months. Well, let's first begin by calculate the monthly change, which is quite simple, which is just the current month's close price minus the price from the previous month. And I could double click to fill out the whole series. Now the next step is to identify those up or down beat market. So in order to do that, let's use if statement. Well, first of all, let's identify those upbeat market. So if the sum of this month with the previous 2 months, if the total is greater than 300 points, we're gonna say upbeat. But if not, let's use other if statement to see whether it is a downbeat market. I do the same, the sum of 3 months total. If it is less than minus 300 points, we call it downbeat. Well, there will be periods where neither of those two happen, and in which case we just leave it blank. So quote and end quote. Now we have 2 if statements, so we need to close with 2 parentheses here, and we can press enter. We could double click on that, and now we see that indeed the market has up and down.